Hello and welcome to this week's segment of Looking Back, Moving Forward. Today is Friday, September 5th, 2008. My name is Jackson Brown. I'm the Vice President of Harborview Lending Group. Today, I just want to kind of go over what happened to rates this week, why did they move, and where they're heading next week. Well, first off, on Tuesday, the ISM index came out a little bit lower than expected. What did this do for us? Well, the bonds got a little bit of a push in our favor. And also what contributed to that earlier in the week was lower oil prices and a strengthening US dollar. Because of those two things moving in those directions, that means less of inflation fears for us, which is very good news for the bonds and the stock market. On Thursday, we had the ADP National Employment Report come out. This kind of gave us an indication on how today's job report is going to come out. Well, it was a little more than expected, so they expected a pretty bad job report today. Well, they were right on the ball because today the unemployment rate came out as the highest in 5 years. Also, the job reports were expecting about 75,000 jobs lost in August. Well, in actuality, we had 84,000 jobs lost today, last month, but today's report, which is 9,000 more than expected. So what did this do for us? Well, it helped the bond market move in an up direction, which is very good for us. Everyone's taking the money out of stocks right now, putting them to the bonds, which is driving the mortgage rates lower. So right now, I expect to see lower mortgage rates going into next week. Now, next week's economic news, we're pretty much going to have a slow week until we get to the end of the week, especially on Friday. Friday is going to be the big one. Retail sales. It's kind of like today. Whatever happened today is going to set the direction for next week. Well, retail sales is going to set the direction of the bond market over the next week or two. So we're going to keep a close eye on that. But until then, I would float, see where rates go. I think they're going to be in our favor. Possibly could see the rates get into the 5s over the next week or two, depending on what the retail sales come out at. Other things going on in the market, well, the bond market, the good sign for us right now is we just broke above the 200-day moving average this week, which is very, very good news for us. If we can hold that and create a bottom floor instead of a ceiling, we're going to see mortgage rates improve over the next month or two. If we can't stay above that, we break down, and that's a ceiling rather than a floor, we're going to be in trouble. Rates are going to probably stay around mid-6s for a little bit. So we're going to keep an eye on that. Stocks have been getting hit hard this week. Especially on Thursday, they got hit. I think they lost about 334 points in the Dow. So everyone's taking the money out of stocks right now, putting them to bonds. That's a safer play at this point in the game. Other than that, lower oil, especially today, they were down about $2. We're going to keep an eye on that. So until next week, thank you very much. We'll talk to you soon.